Happy New Year and welcome back to all of you. This is King World News. I'm Eric King, and before we get into where I see us headed in 2010, I want to start off by thanking King World News listeners globally. The network has exploded in terms of audience, thanks to the dedicated listeners spreading the word to colleagues, friends, and family, and to the many websites around the world linking and promoting King World News articles and interviews. I want to be clear in response to the many emails inquiring as to why the network was started and how it is funded. The network was started because I felt it is something I must do. The public is not getting the truth from the mainstream media, especially when it comes to the financial sector. Even though I've been retired for many years, I've been very fortunate in my financial investing, and this is why I'm in a position to support the network. These are very dark times as the world financial system has collapsed into the abyss. For the record, King World News did not take one single penny of revenue for all of 2009, and we have refused all attempts at donations. Instead, I chose to fund this network out of my own pocket up to this point. Over the last decade of being interviewed myself and guest hosting for other financial outlets, I have received tremendous amounts of emails and requests asking if I could start my own network, and so began King World News. I was unaware when I launched this network that it would explode in popularity the way that it has, and the staff has been bombarded by emails thanking us for giving people access to these interviews and also for giving listeners the true news and facts of what is really happening, not only in the United States, but also from around the world. Listeners have repeatedly stated they just cannot get the information we are providing from the mainstream media. The mainstream media continues to tell people we are coming out of a recession, but the truth is that we are in a depression. And they are using disinformation and lies that even Joseph Goebbels, former Reichsminister of propaganda in Nazi Germany, would say are pushing the limit of reality. Goebbels perfected an understanding of the big lie technique of propaganda, which is based on the principle that a lie, if audacious enough and repeated enough times, will be believed by the masses. And the United States and its corporate media machine continues the big lie, repeating over and over again that we are coming out of a recession. Yes, we are in a depression, and one only need look at the recent decline in state tax revenue, which fell the most in 46 years, according to the Rockefeller Institute. And further stated, 2010 is going to be very difficult for the states, and the next year is likely to be significantly worse. Also in the U.S., we have currently expanding tent cities, and 1 in 8 adults is on food stamps, and 1 in 4 children as well. And there are over 27 million people that are unemployed or underemployed. Let's just say that we are in the eye of a storm. And we have had this massive coordinated global central bank reflationary policy, beginning with the failure of Lehman Brothers. It started with central banks massively cutting interest rates around the globe. When that failed, they floated the next trial balloon, monetization or quantitative easing, as Bernanke discussed the idea of buying treasuries or mortgage-backed securities. 3 months later, at the bottom of March 2009, the Fed implemented their Desperation Act, announcing $300 billion of treasury purchases and $1.25 billion of mortgage-backed securities. The icing on the cake was endorsing that no large money center bank would fail. They had let Lehman fail, and they weren't going to go down that road again. After that announcement, every professional speculator with access to the Fed window went absolutely wild, essentially borrowing money at zero and buying risk assets. To rekindle the risk trade, no large bank would fail was the idea, and that all central banks were going to do everything they could to facilitate stimulating and helping to stimulate the global economy. And this gave speculators the green light to go back in the pool, driving asset prices and markets around the globe to highly unrealistic levels where they currently preside. For all intents and purposes, the stimulus is the economy. So in fiscal 2009, they issued $1.5 trillion in new Treasury issuance for the American Recovery and Reinvestment Act and TARP, while 80% was monetized. For 2010, it is looking like they will issue $2 to $2.5 trillion. This is why the government may have to resort to extraordinary actions to support the Treasury market. An example being the utilization of Americans' retirement funds, which is now proposed. On the U.S. side, as an example, you had a 92% drop in inflation-adjusted earnings, and the P/E was around 90 times trailing fourth quarter earnings. Today, however, with the lift in the markets through massive reflation and speculation, coupled with phony bank profits and phony bank balance sheets, we see the Dow on the precipice of what could be a major collapse. The reason why a collapse is likely is how can you expect the government to continue pumping trillions of dollars of freshly printed dollars, all under the guise of the quote-unquote stimulus, when the backlash is growing in large part because of the Goldman Sachs AIG scandal? When 30 days ago, the Fed chairman, Ben Bernanke, was named Time Magazine's Man of the Year, I think it's important to note, since his appointment as Fed chairman, gold has gone up 90%. The Fed's balance sheet has ballooned from $850 billion to over $2.2 trillion. We've had major institutional failures, a global financial collapse, so I think it's fair to say, at least in my opinion, that his time at the Fed has been a complete failure. Also, with regards to Time Magazine and their Man of the Year award, they gave it to Adolf Hitler and Joseph Stalin as well, right? So I wouldn't put too much weight into their selection. Now let me discuss where I see the markets headed in 2010. Let's start with the stock market. Price affects psychology, as we have seen a roughly 4,000-point rally in the Dow. This has added over $6 trillion of market value and shifted investor sentiment from an extraordinary bearish extreme to euphoric bullishness at this point, with bears at or near all-time lows. From the March lows through today, we have seen the single greatest shift in investor sentiment from bearishness to bullishness in the last 25 years. I want to thank my good friend Bill Lagner, as well as his partner Kevin Duffy, for the excellent work they do with regards to investor sentiment. I think investors should expect to see a significant move lower in the Dow during the first half of this year, as insider selling has reached all-time record levels. For every $1 of insider purchases, there are $82 of insider sales. To quantify that, there has been $11.6 million of stock purchased by insiders, but there's been a massive $957 million sold. By the way, we are going to have a crash in dividends at some point because it is simply unsustainable that companies continue to pay out dividends in excess of cash flow. Moving to the gold market, this is where I see it headed. It's easy to be bullish. And we'll start off with what Rickards had to say this weekend on the interview. He talked about central bank buying and the buy overhang in the market, which is the Chinese, Russian, and Indian central banks, representing 5,000 tons as well as others. And it's quite significant in terms of market imbalance. So Jim says we should be over $2,000 in 2010. My feeling is that when commodities go to new all-time highs, they almost always double in price after a consolidation, at a minimum. So $2,000 for gold is not a stretch at all after breaking the 1980 high of $850. If you look at the move in the gold market in the 70s, gold went up 25-fold. And if you quantify that from the $250 low of this cycle, that puts gold at $6,250. If we just equal the move from the 70s. As far as the mining shares are concerned, investors should understand the tremendous undervaluation of the shares at this point in the secular bull market. They still trade with a great deal of fear and continue to climb a wall of worry, although there has been a bid coming into the junior sector as of late. Also, the shares should outperform the metal in 2010 as this undervaluation versus the metal moves almost certainly to overvaluation at some point. I want to highlight the silver market for a minute specifically. As listeners know, I'm extraordinarily bullish longer term on the silver market. Gold has taken out its 1980 high. Silver will as well. And when it does, I expect it to trade over $100 an ounce eventually. Before looking at the U.S. dollar, it should be noted over the weekend that the Venezuelan government just devalued their currency 50% for the average citizen. And regular listeners should be aware by now, I expect a significant devaluation of the U.S. dollar as well. I want to discuss where I see the U.S. dollar headed, but I talked with Ted Butler about this at the end of last year and also this weekend with him, and there is absolutely a tremendous commercial short position in the U.S. dollar at this point. This was also highlighted on the 4th of January by Dan Norsini graphically over at jsmindset.com. It should be noted that when we were in a similar commitment of traders structure at the end of 2008, the U.S. dollar promptly had a severe, rapid decline of 10%. So we should see the dollar make a significant move to the downside here in short order. One should always remember, however, the commercials are able to handle any heat. So it is possible the dollar could trade higher in the short term, but at some point in the very near future, we should see the dollar much, much lower than it is currently trading. And this should be gold and silver positive. A very quick note with regards to money market accounts. The government no longer insures them, and they are working with the SEC to limit your ability to redeem your funds. So listeners should be aware of this fact. To close here, these are just my thoughts on where I see a few of the major markets headed in 2010. And as always, consult with a financial professional before making any decisions. I will have more to say about the markets in the weeks and months ahead. But for now, since this is our first week back on the air, let me just wish all of the King World News listeners globally a happy and prosperous new year.